As we begin the last quarter of 2017, we now have a chance to catch up with the performance of the bucket list of oil stocks published on malkysblog.com. Since IG last spoke to Malcolm Graham-Wood in June this year about the list, there's been an underperformance of a number of component parts, but at the same time, some particularly good performances of note. Malcolm joins us now with some more on this. Welcome. It's been an interesting summer because there's quite a bit of money taken off the table in some of the stocks. We'll go through some of these in just a minute, but broadly speaking, how do you see things and how do you feel about things?
Well, I think it's quite positive at the moment. I mean, the bucket list has been a bit of a mixed bag because when we did the bucket list, started off in February, the oil price was up 55, West Texas was 55, and it's now 50. So actually, it's still less than it was then. Brent has been a slightly better performer, but actually, you know, 1 or 2 of the stocks have underperformed quite a long way, and 1 or 2 of them have outperformed quite a lot, giving us a slightly minus for the year to date. Yeah. But actually, in terms of what the E&P sector is likely to do at the moment, I think, you know, the risk is on the upside.
Yeah, let's take a look at let's take a look at the list that you've got at the moment, because if we can bring this up, we can get some detail about where the money's been going. It's quite obvious. We'll talk about Boliden in just a minute because that stands separate amongst these. But let's take a look at some of the stocks that come to the surface when you're really talking about the small cap oil sector. Sound Energy down 26%. Now this is one of the big performers that we saw a year or so ago. There's a little bit of money taken off the table, some down some 26% so far this year. If we look at the Sound share price chart, you can see quite clearly what's been happening. How do you feel about Sound at these levels at 53 pence?
Well, I'm pretty keen, to be honest. I mean, I think Sound has gone through a huge amount in the last year and a half because they had the really big upside in Morocco, where they're very much staying in there in eastern Morocco, and that was the thing that pushed the share price up. In the spring of this year, of course, they were drilling the very big well in Italy, the Badile well, which was dry. So you can see that's when the share price came running back down. But it's not all over for Sound because there's a lot going on. They're concentrating very much on Morocco. They've got eastern Morocco, where I'm expecting some information about how they're going to drill the process over the next few months. And I think that you know, they still think that's going to be big gas province in an area where there's significant demand and prices are high. So, you know, this is what you get when you get, you know, E&P companies taking reasonably high risk bets. And the reason why the investors want to have a go at them is they like people who take high risk bets, and some of them come off. So that's what's happened to Sound. I have absolutely no concern whatsoever that Sound will continue to do things. And James Parsons, who's the CEO of Sound, is very much of the view that this is for retail investors and they should be, you know, rewarded and kept in touch. And of course, later on this week, he's taking a riverboat full of 375 people to tell them about what's going to happen next. So I'm not too worried about Sound.
Let's move on. Hurricane Energy, a stock that was the darling of the small cap oil sector a year or so ago. These fractured basements that the chief executive pursuing, it's not returned much this year. What about Hurricane? How far down the route is it of making this business work?
Almost entirely down the route of doing it, but it's actually in the process. And there are 2 reasons for the change in the share price over the last 2 years. First of all, the market always likes exploration companies that find oil, and Hurricane found several discoveries. In fact, I don't think they had a dry hole west of Shetland as they were looking at Lancaster and so on. And so they continued that process. And because it's the way it is, it's fractured basements, it's something that can be produced quite quickly. So what happened was that the market were concerned that they were about to move into development phase. They own 100% of these assets, and Lancaster is a substantial asset, and they have this thing called early production system. So Lancaster is going to early production, and so that will produce oil in the first half of 2019. Now, going from exploration to there, you need to put some money down. So, and especially if you own 100% of the stock of the acreage. So what they've done is they've raised more than $500 million this summer. And there were 2 things that one of the things that spooked the market was they had a warrant issue, which didn't go particularly well, and then they had the big issue, which was a convertible and an equity issue. So they've raised all the money they need, and we're now looking forward to production. As we go into the end of the year, well, it'll only be a year or so before they get production. And the early production system at Lancaster is only the beginning. After that, it's going to be full field. Hurricane will own 100% of it up till, and are happy to own 100% of it up till the EPS comes in. After that, I'm sure they'll farm it out to somebody else. What investors should be absolutely rock solid about is that it's funded. It's funded to first production. It's a very substantial find, and it may be you're in there for the long haul, but it is there for absolute certain. I've got a value of well over £1 for this share. So people who have got anything like a long-term ability to hold on to this stock, I understand why the weakness has been because they've had to fund it and they had the warrant issue problem. But that's behind us now. The shares have picked up from the 29 or 28p that they got back down to after the raise. That's not a surprise. They had a lot of indigestion. For a company like this to raise over $500 million, and they did it in a day, which was quite astonishing, means that people are prepared to believe it. And I think that anyone who's prepared to take anything like a long-term view will be hugely rewarded in Hurricane.
Okay, this stock price here, I should say actually this dotted blue vertical line here is the point at which I know you've taken the bucket list for this year. It's the beginning of February, so you can see the price movement we've seen. 32 pence, your price target there is £1, so well above where we are there. Let's move on and take a look at another stock I know that you like, and that's Amerisur. The stock is down 25% since that blue line that we've got on the share price chart we'll show you in just a minute. Amerisur is another one of these stocks that has done in the past, has done so well and is well off the highs.
Yes, I mean the difficulty with Amerisur came a year or so ago, and in the process of putting what they call the OBA, which is Spanish for the pipeline between Colombia and Ecuador. Up until then, Amerisur were finding their oil in Colombia, but having to truck it all the way to the coast. And that was costing about another $13 or $14 per barrel. So pretty much, half or a third of what it was. Once the OBA pipeline came into action, and they're producing 5,000, 6,000, 7,000 barrels a day through that now, their netback, i.e. the money they make back for every barrel of oil, has increased dramatically. I mean, at $50, they get $30 netback. So it's very substantial, and it's going to get better all the time. The other thing is that they've been refining their position in Colombia, and they've been concentrating almost entirely on the southern part of Colombia, which is near the OBA pipeline. And on that basis, I think you'll find that they've had 2 or 3 big discoveries. They've got a well drilling at the moment, and they've got a thing called the N sands anomaly, which I think could be absolutely huge. And finally, they had a big discovery, funny enough, in the Llanos Basin in North Colombia, which they're in with ONGC, the Indian state oil company, which is a very big discovery. And I think they only have 30% of that, but 30% of that could be, a discovery. It was something like 3 or 4, 1,000 barrels a day. This company's got a target of producing 7,000 barrels a day by the end of this year, which I think it's doing already. And the medium term, it's got a target of 20,000 barrels. If you multiply 20,000 barrels a day times $30 a barrel net back, it makes the share price now look totally insignificant. It's
20 pence at the moment. I'm not sure what the market cap of this is, but you're talking there about probably multiples of where it is.
Absolutely. I mean, and at some stage this business will be sold, I suspect, because they've made it into a very clean business. The guy who runs it in Colombia, called John Wardle, is a first-rate CEO, and they don't need to fund it. There are no funding requirements at the moment. They've got fully funded 16 or 18 well program over the next 18 months, and I think 2 or 3 of those coming in would change the basis for this stock. Totally undervalued at this price.
Yeah. Before we go on to take a look at some of the gainers, we just want to run through a couple more of those that have lost ground. Pantheon Resources down 38%, I think this stock is. A couple of years ago, this was one of the best performing stocks on AIM. But here we are now down, but not out.
No, not out. I mean, we're waiting for the. I mean, there are two wells, VOBM4 and VOBM2, which are one of them. The 2 well is sidetracking the existing well, which they drilled horizontally and went horribly wrong, and the 4 well is going to be testing. I think they'll be. They're already installing the gas processing equipment. The companies say that they'll be selling gas by November this year and getting revenue in December. If these 2 other wells, and I'm pretty sure they will come in, things will change. The trouble is, because it's taken so long, the market has lost patience with this company. Several times it came to the market when it said things and said it was going to happen, and it never did. So it was actually back in December of last year when they came to the market. They did a presentation and said, "Oh, there's nothing we can tell you." So the credibility with the marketplace is in a bad place. But the guy who runs it, Jay, and several other people are very, very good. I've kept my trust in this stock. It's carted me for the time being, but I still believe it'll make a lot of money. And I think this play will make a lot of money, and the company will be sold.
Okay, let's go back to the list, because we've got a number of companies on the upside that we ought to be discussing here. I want to talk about Victoria Oil and Gas. It's the best performing stock on this list since February, when this bucket list for 2017 was put together, almost doubling in value this year. This is a producer of gas, isn't it, in Cameroon, is that right?
Yeah, I mean, I famously said to you some time ago, when the shares were 80p, the shares could quadruple and they would still be cheap. This is one of the best value stocks in the, not just at the bucket place, in the oil and gas sector. The thing about Victoria Oil and Gas, for anyone who doesn't know about it, is that it's in Cameroon, and they do what I call cradle to grave. So they drill, they explore for gas onshore, a place called Logbaba. They have built the pipeline, and the second city of Cameroon is called Douala, but it's the biggest city, and it's the industrial city. So the demand at Douala is, it's something like 150 million scuffs a day. If they could do 50 million at the moment, so that the demand is way higher than they can produce. They just brought on LA 107, which is going to increase that production. They're doing a sidetrack on LA 108. So they've got the potential to maybe produce definitely produce significantly more than they have at the moment. Every single bit of gas that they find, they could sell in Douala, either to the state power generator or to the significant industries there who worked out for power generation it is way better to do gas, and it's as cheap as anything they had before.
So what is it the market doesn't believe?
Well, I think that the market is misunderstand this stock left, right and centre. It's beginning to make, and I'm just beginning to get feedback from people who've worked it out. There are 2 other bits of upside potentially. So this isn't just looking good for the short and medium term. You mentioned Bolívar, but they're still in the process of buying a thing called Bemono from Bolívar, which is gas, 2 or 3 gas wells. They are the other end of Douala, so if they successfully buy that, then they've got more gas to supply to Douala. And finally, they have a big block called Matanda, which is huge compared to anything they've got already. And their initial seismic views on that look pretty good. As you say, the market doesn't understand this. It's probably more of a utility. People think, oh, is there a lot of upside from 2 or 3 wells they're drilling for gas? The answer is yes, because the moment they produce it, they've already put the money down and built the pipeline. They've already got the clients who are paying top money, and they could sell 3 times as much gas as they're producing. Right. It's a no-brainer.
Yeah. Okay. All right. That's currently trading at 68 pence, far short of your anticipated target. SDX Energy, another one that's on the list with a gain of some 30% so far this year. Again, we've spoken about this before, and I know you've been very positive about it.
Yeah. I mean, SDX is in a very good place. It's very well run by a guy called Paul Welch, who's put this business together a couple of years ago. They've raised money 2 or 3 times. They're in Egypt and they're in Morocco. If you remember, they bought Circle Oil, or most of the assets of Circle Oil. So they've got good prospects in Egypt, where they've had a discovery at South Dessouq, which is gas, maybe oil as well. And in Morocco, they've got a 9-well program which they've started last week. This is onshore Morocco for gas. There's a ready market. The wells are very inexpensive, $1.5 to $2 million each, and if they're successful, and I suspect they're more likely to be appraisal rather than exploration, so they probably will be successful, and they've got customers nearby. As I say, they had a small raise a few weeks ago, $10 million, which they didn't actually need, but their shareholders, who are very strongly supportive of the company, said, we want to put some more money in, increase the number of wells we drill, so we can get returns sooner. This company will be producing decent revenues next year with a big exploration program. There's not much not to like here.
48.5 a share. What sort of targets are we looking at?
Well, it has to be £1. I mean, it has to be 90p. It has to be at least twice this level. And I think they've got scope longer term to do more. I think this is a growth business, high margin growth business, doing very well. Yeah.
Just want to go back to the list of stocks because I think it's worth looking at two more. One is the penultimate one, I think we've got there, Jersey Oil and Gas down 53%. Now this is one of the stocks that had so much early promise, and I think this is the thing about these small cap companies. You just don't know what's going to happen around the corner. If you look at the share price chart, this massive, great big gap that's opened up here.
I mean, the thing about Jersey was fairly straightforward. They're a very well-run company. They're very new to the game, but they had an asset in their cupboard which they farmed out to Statoil. Statoil said that it was in their top 4 potential wells to be drilled this year. It's in the North Sea, called Verbier. And we made it perfectly clear. I made it perfectly clear that this was sort of like a punt on a well. If it goes wrong, you've still got other things in Jersey Oil and Gas, and I'm seeing the company tomorrow. But irony is that the little peak that happened just after the huge fall is because Statoil and the partners had an opportunity to sidetrack the well. Now, when it came in dry, everyone was very disappointed. But they must have seen something down there that they liked the look of. They wouldn't have gone back, with an expensive rig to spend another few days. I'm expecting some news from Jersey Oil and Gas any time now. Sort of expecting it when I woke up this morning. I'm just trying to work out the days it takes for Statoil with a really good quality rig to drill a sidetrack. It won't be the end of the world if it is dry. It might come good if it isn't. I don't think there's anybody, people who bought Jersey Oil and Gas at £1, they had the chance to get out of it at £3. Taking a bit of money off the table is never a bad thing, and it's got a high quality management. So they're going to buy production and do other deals.
Animex, the last one we've got to talk about on the main list at the moment, it's up some 37%. Animex.
Yeah, we're in Tanzania here with Amerisur, and we're back to gas, African gas, which is profitable business when you find as much as they have. Notoriety 2 and 3, but their discoveries in Tanzania have been certainly transforming for the company, and I think that they'll go further. They picked up a really good backer a couple of years ago who was prepared to fund them. They're properly funded. There's no debt. They got gas production coming on stream. They're being paid for it, and they've got more on the license. So they've got plenty of upside from this one. The shares move about all over the place.
Yeah. That was 7.7 pence at the high there back in February.
Yeah, but if you look what they've done this year, they've gone from 1.5p to 8p and back down again and up again. I think this is a stock which investors use to sort of sell when they get a bit bored and come back when they, But the bottom line is that Jay Bhattacharya is doing a very good job there. It's a very decent asset, and it's worth a lot more than the share price.
Yeah. Bowleven, we got this on the list separated out at the bottom because this is something going on here that you.
Well, if this was an insurance company, this would be in runoff. Right. This was taken over effectively because a couple of years ago they did a big farm out, so they had a lot of cash on the balance sheet and 2 assets in Africa. One asset which we've already talked about, which they're hopefully selling to Victoria Oil and Gas, and the other, they're in the process of discussions at the moment. I will take Bowleven out of the bucket list just as soon as I do my next shake-up. I was expecting it to be back in July when I thought Savannah was going to nip into the thing and take over from Ithaca. I'd take Bowleven out at the same time. As it was, the day that I said I was going to put them in, the next day they were suspended. So I'm waiting. Probably that Savannah moment will be the moment to bring in 1 or 2 new stocks into the list.
What else is on the subs?
On the subs bench? Well, I'm looking at Echo because, I'm looking at a number of stocks that are in South America. So I particularly like President Energy, where they've been in Argentina. They've just done a really cracking deal in Argentina to bring them on more production, now producing 4,000 barrels a day. I'm looking at Echo, as I said, because the new management there is Fiona Macaulay, who used to be at Rockhopper, and they're doing deals. They've done a deal in Bolivia. They've got one or two other deals on the go, I'm absolutely sure. So they're looking at South America. But in that area, funny enough, the number of companies in Trinidad are doing very well, and Trinity is a perfect example. Really high quality portfolio of assets, and just beginning to do it, and profitable. You know, Trinity had a really difficult time in the 18 months up to about January of this year. They managed to refinance it, and they're doing very well. So I'm looking at Echo, President, Trinity. You know, Wentworth is interesting next to in Tanzania as well. Ascent Resources, a lot of people tell me there's excitement there. You know, that's in Eastern Europe. Empyrean has been a fantastic performer recently with the well, and I like the way Tom Kelly's moving there. I wouldn't put it in right now because it's had a run, but I have to say that the Dempsey well in the States has done particularly well. I might even buy Gulf Keystone. You never know.
Look, Malcolm, we've got to leave it there. But thanks indeed
for
joining us. Malcolm Graham Wood from malkysblog.com. You can catch up with more on Malky and his blog. On that website address, you can have a look at the bucket lists and all that goes on, and also take a regular note as well from Malcolm on a regular basis, going through some of the stocks that he's got his eye on.